And then we went back to the seller to do a price drop. So I think we got a price drop of about 80,000 from 405 to about 325. And that's when, you came into the picture, we assigned it to you. And the assignment fee at the time was 15K. So I think we assigned it to you for 340. But again, man, the interesting part is you went ahead to renegotiate with the seller, right? So from 340, I believe, I think you renegotiated with the seller, added like a VTB, so that's really where, I want us to dive into like, welcome to the Deals Estate Wholesaling Podcast, where we discuss finding, financing, and facilitating off-market real estate deals. I'm your host, Deji, and I'm joined on the show today by Jude Gomes to discuss and share his experience BRRRRing one of our wholesale deals. Jude is a multifamily real estate investor born and raised in Ontario. He has invested in various markets across the southwestern Ontario region and continues to expand his real estate portfolio of multifamily properties in that region. He's currently scaling up into larger buildings, and his strategy is all about focusing on off-market properties and reaching out to sellers directly. And we're going to discuss some of the strategies in this episode. So what are the things that Jude and I discuss? One, we discuss the difference between finding properties on the market versus off market. We discuss the strategies that he uses to find off market properties across southwestern Ontario. And finally, we discuss how we BRRRR'd one of our off market deals that we assigned to him. So guys, you do not want to miss this episode. Before we dive in, we want to say a big thank you to everyone who is tuning in. If you are a fan of the podcast, hit the like button, the subscribe button, the notification button, and definitely leave us a 5-star rating. So let's dive into today's episode. Hi, Jude. Welcome to the Deals Estate Wholesaling Podcast.
Hey, Deji. How's it going? Thank you so much for having me. I'm really excited, man. I'm really excited. This is my first podcast, and it feels good to kind of start, coming out on social media and stuff like that. So I appreciate people like you, Rise and Mike. There's a lot of people in the community that are kind of bringing people together. So, I'm really excited to be contributing to people learning. Maybe someone can learn something from me. Maybe I can learn something from you. So I'm excited.
Thank you very much, man. And trust me, you're not as excited as I am. As you know, I've been chasing you for this episode for the longest time. So that you're here today I'm just elated. And that's because, and I have to tell you this, and I don't know if I shared it with you earlier, like the deal that we worked on together, very unique deal. The strategies that you used, honestly, I don't think we've had any buyers who have used those strategies. So it's very, very interesting for us to go deep into it today and just share with everyone. So yeah, man, thanks for coming on and your willingness to share your experience with everyone.
Yeah, man, I'm excited. Thank you for having me.
All right, cool, man. So, before we jump in, I usually start off the episode by asking, our guests to tell us about themselves. So, who is Jude Gomes? You let everyone know who you are.
Yeah, so basically, my name is Jude Gomes. I am a real estate investor, southwestern Ontario. I primarily invest in Windsor, Chatham, Sarnia, and like that area of southwestern Ontario. So that's kind of what I'm doing right now. I'm focusing a lot on the multifamily real estate portfolio. That's kind of where my focus is now, and then also kind of developing some sort of side active income business as well at the same time. So yeah, just trying to scale those two things, and then build a solid portfolio for myself.
Cool, man. So when you say multifamilies, are you referring to like the smaller ones, 2 to 4, or are you referring to like the commercial ones, like 5 and up?
Yeah, that's a great question. So when I first started, I bought my first property when I was 19. I bought a single family home with my partner, Cleantha. So we basically bought that property starting into single family, not really knowing much, to be honest. We just kind of just bought it because we were both kind of entrepreneurial, had that business mind, and then we kind of pooled money together, bought our first property. Before that, we were both kind of active in entrepreneurial journeys on our own paths, like separately, and then we kind of met through entrepreneurship. We met through like learning. We both went to school for engineering, so we kind of had
Nice.
that same level headedness together. So we find kind of where we were at, and then bought our first property really young, just ourselves, no JV partners or anything like that, just us two. And then yeah, we since then we've been able to scale our portfolio from like smaller multifamily, triplex, duplex, fourplex, that sort of thing, and now we're kind of getting into the 10 plus units right now. So that's where
Nice.
we're right now, and yeah, I'm excited to kind of keep on this journey for sure.
Yeah, man. Like you and Cleantha, you sort of remind me of like Alex and Lila Homozi, right? It's like power couple, doing the entrepreneurial thing. So yeah,
Yeah,
it's great, man.
thank you,
So
man.
that's how you sort of started your journey. But like, how has that sort of translated to like, how you guys, have gotten here? Did you start like during COVID period, and how has like the market been for you since then?
Yeah, so good question. So for my first property, honestly, it's completely different to when I bought my first property. Immediately when we did, the market kind of just went crazy. We did very good on this one deal. And then we had kind of two options. We either refinance or we sell and then do it. And we kind of learned the BRRRR process after that. We got lucky with the first one,
Yeah,
and then opened ourselves up into like how we're gonna like get more properties. Once you buy the first one, you get that itch to buy more, right? Because it feels good owning
yeah,
property,
yeah.
cash flow, right? And back then, interest rates were so low, we were cash flowing insane amount on just a single family, right? So we knew that we wanted to ultimately scale into multifamily and have that sort of niche. And then yeah, so we sold off the first one and then kind of got into the bigger ones for sure. Yeah.
Perfect, man. So, for anyone who's looking to start, like you mentioned that you and Cleantha, did this at 19. Like for anyone who is looking to start, that's thinking, hey, I'm too young, or, like I don't have enough capital to, start this, what would you say to them? Just at a very high level.
Yeah, that's a great question, Deji. And honestly, like I feel like for me, I want to kind of show other people. There's not many people my age that are kind of in the space. So if anyone's listening, I it's good that I can provide some sort of a feedback. But I think when you first start, you definitely have to put a lot of effort into it. Definitely have to put a lot of groundwork into it. You definitely have to use, you can't treat it as a side hustle kind of thing. You kind of have to focus full
Yeah,
time. And it may seem like it's a far-fetched idea to, oh, I'm going to own an investment property, I'm going to own a house or a multifamily property when you're so young. But I think if you apply certain strategies and you're able to be kind of smart with how you go about your real estate journey, I feel like it's actually very doable for a lot of people. It's very doable to grow a portfolio of a couple of properties and then ultimately scale. So I think it's just where your focus is, what you think you can do. It's all kind of in your head. If I believe I'm going to own 100 units within a couple of years, I think I can for sure do it, right? But if you think I can own three houses in the next 3 years, you can do that as well. I feel like
true.
whatever you think you can do it. Because realistically, for someone like me, if I started at 19, let's say I started with 30,000, that's how much I started with. I started with $30,000. Clienta started with 30,000, around that mark, and now it's significantly into the seven figures within just a couple of years. If I was able to do that, and I will continue to get into the bigger numbers, add extra zeros, stuff like that, I know, because I believe that I'm going to be able to get that. I feel like it's kind of
Yeah,
all in your mindset in the beginning, and then obviously you have to be in the game to learn what not to do, what to do, what you got to make the mistakes to get to the next level, right? So I feel like just being in the space, being like around other investors to see how they do it, I feel like that's more valuable than actually your age. Because if I did it, I feel like anyone else can do it, right? Yes, I started young, I started doing entrepreneurial journeys, but I feel like now it's exponential because I did that groundwork in the beginning, right?
yeah, yeah. And spot on, man. Like, if anything, age could actually work in your favor, right? Because depending on how young you are, you might not necessarily have the responsibilities that older people have, right? So, in a way, age could actually work in your favor, with the younger you are.
Yeah, absolutely, man. I think for sure it's definitely important to just get your head in the game, kind of do things like just level up your knowledge. It's always good, especially if you know that real estate is where you want to be, or this business is where you want to be. If you know that that's your path, I feel like you should definitely go like all into it for sure.
Yeah, yeah. Okay. So, starting in this game, how did you sort of get into the off-market space? There's people that have been buying real estate. They usually buy properties on the market. How did you start buying properties off-market, or how did you get to know about off-market properties, and how has that sort of differed from buying the traditional way on the market?
Yeah, that's a great question, Deji. I think honestly, off market properties on its like on a topic on its own, I feel like that's what I can attribute a lot of the recent success to. Why? Because you're able to kind of get properties that maybe not many other people would want, or you can get properties where it like the seller kind of has a need to sell if you catch them at the right time. If maybe they've been thinking of selling and you approach them, and if they have a good buyer in front of you, especially with multifamily properties, if they have a buyer in front of you, then and they want to sell, or at least have a motivation to sell, they'll at least hear you out in that sense, right? So I feel like I started pretty like as soon as I bought my first, which was actually on the market. After that, I don't think I never bought an on market property again, apart from a duplex. But
Yeah.
just recently, it's just been mainly off market properties. A lot of the deals on the MLS, I'm seeing does not make too much sense, especially in the multifamily in the multifamily space. So I feel like
Yeah.
off market properties is definitely definitely a topic that most people need to explore in order to have that exponential growth, especially at the beginning. Because you and I, like when we started, we had not much money, right? So you have to get creative with your deals. If you don't have money, you have to be
Yeah.
creative on the other end, right? So yeah, since we started with not much, we have to be creative to implement those things to get a starting capital at least, right? So by doing that, you
Yeah.
can kind of buy properties significantly under market value, do some work to it, and obviously where you're going to end up. In multifamily, it's very about the numbers. So
Yeah.
I feel it's very easy to kind of understand where you're going to be based on cap rates, net income, etc. Right? So yeah, I feel like
Yeah.
off market properties is definitely very important.
Okay. And when you think about how the market was when you started, and maybe how the market has been like the past couple of months, like how would you sort of compare and contrast, these markets? How has this current market cycle been for you? Are you currently focusing on the same strategies? Have you been doing different strategies this past couple of months?
Yeah, so I feel like I kind of had a very unique start to my real estate journey. Um, Definitely, if you bought real estate at the time that I bought real estate, which was 2020, 2021, which was my first property, early 2021, and everyone was making money. Everyone was just buy anything, you sell it for 100K more, refinance. Everybody was making money, right? Everybody was just buying anything, and everything was selling, right? So I feel like in this time, I kind of saw the flaw in the situation. I kind of understood that most people were buying properties that were not good assets to hold like long term, right? I feel like you should kind of think about that in
Yeah.
the short term as well, because you need to make sure that the assets will be you can force some appreciation, not the market just carrying everything, and you being able to sell without doing anything or without doing too much, right? So I feel like I kind of knew the flaw in the situation, and I still remained kind of to a ground level, but I feel like I had that unique understanding because I was fortunate enough to be mentored by another multifamily investor in the space, Mina. He's doing like hundreds of units, to learn from him and to learn from how he's buying properties. I feel like applying that to like the smaller scale really gave me that advantage. So definitely having a mentor in that situation to tell you, to give you that immediate feedback and tell you what to do, what not to do, based on his experience of owning
Yep.
hundreds of units. I feel like having someone in that case definitely is valuable in my situation for sure.
Cool, man. Cool. Okay. Um, Very interestingly, I wanted us to discuss like a particular deal that we worked on together, um, and just get your experience on it, right? So I know this was probably like a year ago today, because I think it was December last year, if I recall correctly. So it was a deal in Leamington, I believe, Russell Street, and you bought that from us. So just wanted to dive into that deal, get your thoughts on how you went through the process. I think one thing I've been getting from our listeners is they want to understand like how like a deal is actually take it through from end to end, right? So, I thought it would be great for us to dive into the project, and I thought I'll just share a few highlights, that I can recall. So I believe we signed the APS initially for about like 405,000, so 405K, and we weren't able to move the deal at the time. And I recall it could have been maybe the zoning issue. I think it was zoned as a duplex, but it had 4 units. So a few things were going on there. We had to speak with the city back and forth, trying to get like what the real zoning was so that we know exactly how to market the deal. And then I remember that we did an appraisal. So I think the seller did an appraisal, if I recall correctly. And the appraisal came in a bit lower, right? And then we went back to the seller to do a price drop. So I think we got a price drop of about 80,000 from 405 to about 325. And that's when, you came into the picture, we assigned it to you. And the assignment fee at the time was 15K. So I think we assigned it to you for 340. But again, man, the interesting part is you went ahead to renegotiate with the seller, right? So from 340, I believe, I think you renegotiated with the seller, added like a VTB, so that's really where, I want us to dive into, like, just to get your thoughts on, you got a deal from a wholesaler, but you renegotiated the deal because you felt maybe you could get better terms, and you did get better terms. You got a VTB, a change in price, and you basically created like a better deal for yourself. So, just wanted to like start off with the first stage, which is the deal analysis, right? So, a wholesaler gets a deal on a contract, sends this out, and then you are looking to buy the deal. So the first thing that you're going to do is obviously to analyze the deal. Does it work for you? Does it not work for you? So just wanted to get your thoughts on your thought process around running that deal, how you came about, like the numbers, what numbers work for you, how you got to the point where you are like, I might have to renegotiate this deal to make it sweeter for me. So just wanted to get your thoughts on that.
Yeah, so that's a great question. So yeah, I definitely remember the deal. It's pretty fresh in my head since it's been in the last week. So yeah, I mean it was a pretty good deal. I feel like I was able to execute pretty well on that one. But honestly, you guys did a great job in terms of how you negotiated it. I didn't even see the deal until it was at that low price, because that's when it caught my attention, I guess, right? So definitely it was honestly right time, because I had just finished a triplex and duplex project. So those were kind of at its exit at the closer to the end, right? So I was refinancing both of them pretty much, and then I had some capital ready to go. So before I was able to retain that capital, I was obviously finding the next deal. So kind of right time, I saw it on Facebook and like listed by you. So yeah, once I saw it, I immediately, it's in the areas that I'm purchasing in, Windsor, Chatham. I was in that area. I've never honestly invested in Leamington. This was the first property that I ever purchased in Leamington. And like, I was so skeptical in the very beginning. I was really worried. Honestly, the fact that like the reason why I renegotiated in the first place is because I was not confident at all. I was not confident in any execution at all. Because it's been a new market. It's a brand new market. I didn't know what things were. I didn't have a really like a team in place, I guess you could say. So I had to really build that team. So definitely I was really worried in the beginning. So that's why I had that click in my head to, try to renegotiate something on the back end, and then try to make it a little bit sweeter on my end so that I can execute properly. Because honestly, if I felt like it was a really good deal, maybe I wouldn't have negotiated that, right? But I feel like in my I always try to stress it out a little bit more, see if I can get a little better terms, maybe understand the situation a little bit better, right? I don't really need to go into a deal not really knowing anything. I'd rather connect with the seller in some way, talk to them and see why they're selling, and then maybe I can figure out a better situation or a better exit strategy for both parties, right? So yeah, in this specific case, I think I already agreed to kind of go ahead with the deal. I'm pretty sure I paid like a wholesale deposit, of some sorts. And then, so at that point, I already knew I kind of had secured the deal. Now it's in my ball court. I can kind of do whatever I want, right? So, which technically you're not supposed to do, but I wouldn't really want
so we'll get there. Right?
I wouldn't recommend this for anybody else, to be honest, but I felt like I kind of I just, felt, I don't know. So anyway, so
that's like, one of the reasons why this is very interesting, because so to your point, and you are correct, technically, like you're arguing to do that, right? So when you did it, I was like, what? And in my head, I'm like, wow, this is the first time this is happening. So even I didn't, like, myself and Alan, we didn't even know how to manage the situation, because it's like, okay, we've assigned a deal, the price is fixed, the assignment fee is fixed. Then the deal is then renegotiated with different price and terms. So how do you sort of close that type of transaction where the assignment fee is dependent on terms and like price that has changed? So that was a very unique situation, right? So, and that's what I was saying. It was the first time it happened. I don't know that, like, those transactions would typically close. Like, if the lawyers were very stubborn, like, I've met very stubborn lawyers, like, if they find one thing that is a bit sketchy and they don't understand, they will try to like force the deal not to close, right? So I feel like maybe all the lawyers in the loop, like your lawyer, like our lawyer, the seller's lawyer, I think they were all looking for the deal to close, right? Just because it was a very unique deal. So yeah, like, it was definitely very interesting. But I wanted to even start from the top, right? And I think a lot of things were happening there. So I mentioned that we had a price drop of about 80K. And you mentioned that you didn't even see the deal until it was at the price points that made sense for you. So I just wanted to get your thoughts. Like, a lot of times now you see a lot of price drops, right? So when you're analyzing these deals and you see a wholesaler send out a deal and it doesn't meet your price, do you wait until they do a price drop until it gets to your price point and then you engage? Or do you like reach out and say, hey, you know what, like, I saw this deal, I like this deal. The price that you have it at isn't the price that I wanted at, can we do a deal?
Yeah, that's a great question, Deji, because right now, like honestly, even back then, like a lot of wholesale deals don't really make sense on the surface level. I
Yeah,
think a lot of the profit is kind of already taken within the wholesale fee to a certain extent, obviously, and it obviously
yeah,
depends on the deal, but a lot of the times that is the case, right? Because obviously, your seller needs the best price. I understand the situation. Your seller needs the best price. You need to make a little bit of a fee, like to for providing the deal, for providing your marketing, for you
yeah,
at the end of the day you have the overhead, right? The wholesaler, especially if you're doing it on a big scale, you have fees that you need to pay every month, marketing, employees, things like that, if you're doing it on a big scale. So I understand the situation, but yeah, so in that sense, uh uh yeah, in that sense, I guess I sort of wait for any deal to make sense in my head. Like I sort of look at it on a surface level, like maybe price per unit, and then after that, maybe I do the numbers. I kind of figure out the numbers if it makes more sense for me, if it doesn't, and then I go deeper down, and then I do a walkthrough, and then I do an inspection, and then maybe I make an offer, and then after that, do your due diligence, right? So
yeah,
it kind of steps to it, and I feel like a lot of deals on the surface level don't make sense, so they're immediately like I immediately say no in my head and I move on, right? And then there's
yeah,
other where okay, maybe the numbers make sense, maybe it's a good asset where the price reflects a little bit of a premium, but if it's not, then how am I going to adjust? How am I going to kind of figure out what sort of profit margin I'm making? And for me, multifamily, it's really easy to determine if an asset makes sense or not, because your exit strategy has to essentially get all your money back plus your down payment. That would be the ideal way to scale and have a business
yeah,
within real estate. If you're just doing it as an investment, okay, great. You can invest your own money, maybe you get from work, maybe you have a business and you're making good money and you invested in real estate, then okay, that's great as well. But you need to understand where you ideally want to focus your efforts on, because realistically real estate is a business and it takes a lot of time. It takes boots on the ground. You either need people or you need to do the work. You need
yeah,
people behind you. You can't, especially if you want to get to a scale where you have a couple hundred units or so buildings under your belt kind of thing. To get to that point, you need to have a good team. You need to have a good system. If you're not going to execute well on a project that's only 10 units, how are you going to execute on a 60 unit building, right? So
yeah,
I feel
yeah.
like the deal itself is very important, because any deal can put you back behind a lot. Any deal, like you have to be very selective in what deals that you take on, because realistically, one deal for normal people, like just working a
Can
job,
set you back.
it can set you back a lot. It can put you back a lot. So I feel like the extra effort to make sure that your deal is soundproof, it's good. You cannot fail on this execution because of the numbers, and because of the
Yeah,
numbers only. Because if the numbers are not good, you're not going to even waste your time. If they're semi-good, okay,
Yeah.
you have to make the terms work for you. And if they're really good, then you should be sure that you're going to execute well, right? And take that deal on. So,
Okay.
yeah.
Perfect, man. Like, I love that. And, honestly, like, in wholesaling, wholesalers take pride in saying, okay, I negotiated a deal that someone made money from, right? In this case, we negotiated a deal, then you renegotiated it. So at some point it was like, oh, wow, like, is it that the deal we negotiated wasn't good enough? But I think like for me personally, I took it as like lessons learned to say, hey, you know what, like you could always create a deal in a way that works for you, right? And with wholesaling, you don't necessarily know what your buyer's resources are. Like different people have different types of resources. Some people have contracting teams on payroll. Some, would hire GCs. Some don't hire GCs. Some have a realtor business where, when they are selling, their cost isn't 5% plus HST. Maybe it's 3.5. They can save on the realtor fees. Some buyers probably have a brokerage where they save on the lender fees. So you don't know what your buyers resources are. So different people have different resources and they can close differently. Some have private like mortgages and their cost is high. Some are going to use their line of credits, their cost is lower, right? So different people with different resources. So I find that you might negotiate a deal and think, oh, this is a great deal for maybe this segment of people or this segment of buyers. But maybe for another buyer, the deal doesn't work because maybe how they are closing the deal, they're closing with a higher cost of financing or something, right? But I wanted to dive into your own thought process, right? So the deal we put together to you was a straight deal, no VTB, right? It was 325. We took it down from 405 to 325. So we got an 80K price drop. And in our wisdom, I was like, oh, wow, 80K price drop. That's fantastic, right? Maybe that's the best we could do. So we got an 80K price drop. We added a 15K wholesale fee. So we had it to you at 340. And then you got a VTB and you got like an additional change in price. So I just wanted to get your thoughts on, comparing the price that we had it to you, like no VTB versus, I think this deal requires a VTB. How do I negotiate with the seller after the fact to actually get him to accept the VTB? So just wanted to get your thoughts on, how that process was for you, how you actually engaged with the seller and how you actually got it done.
Yeah. So basically, typically, like especially if a deal is off market, in this case, it seemed like, maybe the deal was difficult to sell in terms of a wholesaling standpoint. So I kind of understood the situation and I understood that the seller was a little bit frustrated in this case. He just wanted the deal closed. He had his reasons to sell. So in my perspective, I just wanted to understand why he was selling, just in general, right? So I wanted to see if I can figure out something. So it just so happens that my contractor that went for me on the walkthrough, the first walkthrough, or the second walkthrough actually, he's somehow spoke the same language as the seller. So obviously, that immediate trust was built in that case. So it was a lot more comfortable for me to even ask for these things, right? So basically, I told my contractor, invite him for coffee. Let's go for coffee right after this, right? So pretty much, I took the seller to just the Tim Hortons around the corner. We sat down. He bought. I bought him coffee. It was good. So we sat down. We talked. I just tried to understand. Kind of just tried to get an understanding of why he was selling. So it turns out his son just needed the money. He bought a house and he just wanted to get rid of the property. He had 3 units vacant, so it was not really making any money anyway. So had a reason to sell. And with that being said, I know that my ask is ultimately going to be, I need a VTB, or please give me a VTB. I know that that's going to be my ask, so I have to understand how much I'm going to ask for. So I understood that maybe he needed around 200K in his pocket after closing, right? Or around that, give or take. So I understood that, and immediately I just asked for the rest as a VTB. And one thing I do is I never mention interest. I don't really mention interest at all because I try to position it where I'm doing him a favor, sort of thing. I'm taking on the property. It's a lot of risk. It involves me being hands on. I'm going to put my team, and it involves me also convincing him that I'm going to execute on the property. Right. I also had to sort of convince him that the property I can't get a mortgage for. I have to go privately. I can't borrow that amount privately, it's going to be a lot of risk, it's going to be a lot of interest, and ultimately it's too risky for anyone to take on. So I had to kind of convince the seller that for me to like take this on, I need some sort of backing from you, right? So basically, it was just me and the seller, me and the owner, and then my contractor as well. And then the seller called his wife, because ultimately the wife is just the decision maker. And
Always.
there's always a husband wife situation in that sense. So yeah, I sold the husband, now I had to sell the wife. So I ultimately sold the husband so much that he convinced his wife. So in the same time, we all agreed on the spot what the terms were. We were all on the same page. It was a mutual understanding. The seller was happy, I was happy. One of the things that he was also kind of worried about is he didn't have a firm closing date. He didn't know when he was going to close on the property. He didn't know when he was going to be able to get his money. That was a
Yeah.
huge uncertainty for him. So I gave him clarity and I gave him assurance that I will close on the date that I'm telling you I'm going to close. So I told him January 20th, I'm going to close. And this was like around Christmas time, right? So obviously I ultimately closed on the property, and we were both happy. And I was ultimately able to get 6 months no interest, because he understood that I need that capital allowance to renovate the property and whatnot.
Okay,
So
cool, man.
yeah, and then I was able to execute in around like 3 to 4 months, I would say. And then he was obviously really happy, and I finished a BRRRR pretty quickly because of the vacancies, obviously. And
Yeah.
then and he was ultimately really happy at the end of the day. I'm glad I was able to make that situation good for both parties and not just one sided, like as most investors would feel in that situation.
Yeah, man. Like, honestly, like, kudos to you. Like, as much as we're discussing this, because it went well, of course, during that event, it was a bit like, oh, what's happened? How do we handle this? There was obviously a lot of uncertainty with respect to, if the deal was going to close, like would the lawyers raise any issues? As you've said, like, it wouldn't be a traditional way, like to go around things. But I think, like, personally, I just respected, like, the approach you took in renegotiating the deal and getting it to a point where it worked for you, right? I wanted I wanted to get your thoughts on this. So, with the relationship that you built with the seller, do you think it helped that there was trust with your contractor? Do you think that played more of a part, to agreeing to give you like a no interest VTB, or do you think like it was just more of, okay, like, for him, he didn't really need the money, and he was fine with waiting 6 months?
Yeah, so I think definitely having a little bit of trust with the contractor definitely helped that. And the initial rapport that you have to build, like in general, when you're talking to somebody, they either like you or they don't like you,
Yeah,
right? So I feel like that immediately that kind of helped me skip that first step and immediately I
yeah,
can start to talking to him like more on a deeper level and more understanding why he's looking to sell, right? So, and for him, honestly, he did need the money, to be honest. Like he needed all of the capital right away, but he was kind of happy with what he would get in immediately versus in 6 months. So it kind of provided
yeah,
him comfort, especially since he had a firm closing date. That was kind of the main hindrance in his.
yeah. So I definitely see one thing, right? Like, and this is obviously a testament to like anyone who's listening, right? Like, speaking with sellers, knowing exactly what their pain points are, knowing what their guidelines are, what they are willing to work with and not work with, really helps you create the best deals. And, like, if you are doing this at scale, you might not necessarily be able to speak with the seller like face to face at the Tim Hortons in their house, at that deep level every single time to be able to get to the root of why they want to sell. But I feel like being able to identify like their core motivation, why they are looking to sell, gives you the flexibility to create a deal that is like win-win, right? So I just wanted to highlight what you guys did there.
Yeah.
Okay. So now we've spoken about like deal analysis, we've spoken about like negotiation. So another part that I know that a lot of our listeners always want to learn more about is how you finance off-market deals. And in this case, you got a VTB. So part of the purchase price was seller financed. With respect to the portion of the closing that the seller got in their pockets, did you like give them cash? Did you finance that with like hard money? Did you like, how did you sort of get that portion closed? And then, when you went through the 6 months, you didn't pay interest. I remember that out of the 4 units, 3 were vacant, 1 was tenanted. How did you sort of get that tenant out? And, how did that's, 6 months work for you to then refinance and, pay the seller back, pay the initial funds back?
Yeah. So, I mean, that's a great question. So the vendor take back, just as a background, is essentially in second position. So it had a second position mortgage on the property. The seller
Yep.
had security in that sense. So that being said, I had a first mortgage as well. I obviously understood that the property would be more of a short-term project. So I
Yep.
factored in a lot of the fees and interest associated with the private mortgage. In this case, the main reason why I wanted the VTB in the first place was actually just so that I can approach someone and raise 200,000 for the down payment, right?
Got it.
So instead of going to a private mortgage, maybe I'll get 75, 80 something percent loan to value, but on the other end I'd have to pay a lot of fees and a lot of like interest and lawyer fees and all that
Yep.
stuff. So ultimately I was able to just go find someone that had maybe like a 200K line of credit or 200K cash in the bank, and then and lend on the first position mortgage, and then I would pay interest payments for the duration of the loan. So that's
Yep.
how I was able to close. Yeah, typically in a case where the units are not vacant, it would be a lot more challenging to kind of factor the interest in, because you're not really sure if an exit date in that sense, right? I
Yep.
knew that worst case scenario, the tenant doesn't leave in the last unit, and I have to rent out the other 3 units, and then I refinance with that as the income. That's my worst case scenario. Best case scenario is the
Yep.
tenant leaves, and I'm able to re-rent it out, renovate the unit, etc. Right? Ultimately, the tenant did stay in the property. They were good people, so we just decided to keep them. They were, they agreed to us to do some work in the property, and we increased the rent a little bit, and then
Oh, nice.
and then the other units we were able to renovate, lease it out, and the rental market in Leamington exceeded our expectations by like maybe 30% of higher than what I was expecting and
Whoa.
what I had my numbers at. So after that, I fell in love with Leamington. Like just in general, the tenant population there is amazing. Me and Clienta, we both love Leamington, and we really want to buy more properties in the area. It's just there's a limited supply for sure, and we're thinking, maybe
Yeah. Yeah.
development in the future, because there's a lot of growth in the area. So that's something that we're looking into. But yeah, for now, like definitely, I like you guys made me look into like a new market, so that was actually pretty good. And now that's gonna be
Okay, perfect, man. So, I don't know how comfortable you are sharing, some of the numbers. I know you shared some numbers, like on social media, like a while back, but I think it's always helpful to close the loop. We've walked everyone on the episode through like how we found the deal, how we negotiated it, and they have an idea of like the initial EPS, how we, took it down. So just wanted to get your own thoughts on, closing the loop. What were the numbers like? You mentioned that the rental amount was, better than, what you expected. So it was obviously a full bar, and I think you got some money back. So just wanted to get your thoughts on like the overview of the deal, the numbers, just to get some people excited.
Yeah, so pretty much I bought it for the purchase price on the contract was 325, the 15K wholesale fee, so 340 in total as a acquisition price, uh, and
Yeah.
that's mortgages, whatever, and then I spent about 100, just 98,000 on the deal, so just shy of 100K. And then I was able to like we redid all the units, the 3 units. We did some upgrades in the main unit, and then we also did the exterior. Like we did the landscaping and we did the painting of the exterior, made it look nice a little bit. And then we were able to lease out the property. We were able to get 63.50 in rent, I believe. Yeah, just around there, 63.50
Whoa.
monthly rental income on the property. And then it appraised at 690K, and then we were able to get a 75% loan to value mortgage with a commercial lender. All of our stuff now is commercial when we refinance, just because we're still fairly young, and we're still maybe don't have too much income on paper. So definitely commercial route. they
Yeah.
value the building and how much income the building produces. They value that more than
Yeah.
yourself, as long as they're kind of comfortable with you executing on the property. And especially when you bring the commercial lender a stabilized asset already, they have no problem lending as long
Yeah.
as it meets the debt servicing criteria. And then that was obviously built into my original purchasing plan and exit strategy when I first bought the property. That was my clear-cut exit strategy to be able to execute in under 6 months, and we were able to cut that time in half just because of the planning I did before closing. And then yeah. Oh
All
yeah,
right.
sorry.
So
The
at a
numbers.
very high level,
I can finish
yeah,
the
I was going to
numbers.
say, yeah. Why don't you finish? Yeah.
Yeah. So yeah, 690, 75% loan to value. Our new mortgage is about just over 500, and then like all in costs are at about 450K. And yeah, so we're able to pull out a decent amount and then get our down payment. I mean, not really down payment, but wholesale fee cost and renovation cost back in
Yeah.
our pocket, and also pay out the first and second mortgage. And the seller is happy, first mortgage is happy, I'm happy. Yeah.
Everyone is happy. Like
Yeah.
this. These are the workings of a home run deal. And like the reason why I wanted to share, like I wanted you to share the numbers is because like from a wholesaling standpoint, it's also a good feeling when you wholesale a deal to someone and the person makes money, right? So, at a very high level, you raise the value of the building by you more than double the value of the building because you bought it at 325, it appraised for 690. So that is like a huge lift, in the value of the building that you guys did. So, and you did that in a few months, right? So I think it was like a 3 month turnaround,
Yeah,
if I
yeah.
recall.
It's just about just a bit over 3 months. Yeah.
Yeah, man. So yeah, so like 325, I paid for 690. So the money that you guys got back in your pockets, in addition to owning the building, like was about 50K
Hmm.
plus or minus.
Hmm. Yeah.
Oh, cool, man. Congrats. So, like when you look back, what would be your takeaway from the deal? Like, what was your overall view of the experience?
Yeah. So I think more so like experience on that deal was more so kind of execution. I think me and Clientha, we both learned a lot in terms of execution on the deal. This was our first deal where we kind of immediately off the ground closing, immediately started spending a bunch of money in renovations. Just doing that BRRRR process, right? So we've done it before, but it
Yeah.
was the first time where we had a backing of, we did a couple BRRRRs, we had a couple BRRRRs under our belt. We were ready to kind of put our knowledge into one property, and we just kind of planned very well in terms of that sense. So I think that was good. In terms of execution, I feel like we kind of shifted strategies in terms of kind of who the types of contractors we hire now, who the types of trades we are now. But I think that taught us kind of which type of person, which type of company to hire to execute on the job, like the contracting work, and then maybe property managers, leasing agents that we dealt with. We ultimately leased out the units, like Clienta leased out the units herself. That's kind of her role as well as being the kind of realtor and stuff. So
Yeah.
yeah, that definitely taught us a lot. We were able to implement that into our next, like flip, and we purchased a sixplex around the same time actually, and yeah, so that was a big learning experience for sure.
Perfect, man. Congrats.
Yeah, thank you, man. I appreciate it.
Okay, so like thinking back now and looking at where you guys are, like what's next for you guys for 2024? You mentioned that you purchased a sixplex around that area. Like
Mhm.
around that time, was it around the same area? Like, are you still in the sixplex? Like, how does that fit into your plans for 2024?
Yeah, man. So the sixplex was early 2023. We're actually like complete the project at this point. So we're just about to get, like we're pretty much stabilized that asset. We're just waiting on, like
Yeah.
the delivery and stuff for commercial. So yeah, that was a decent project as well. Really beautiful asset. My favorite property. I think this is one of the properties that I'll keep, long
Oh,
term,
nice.
because mainly because we put a
Where
lot in Sarnia. Is in Sarnia.
is it? Oh, it's Sanya. Okay.
Yeah. So this is one of the properties that we put a lot of effort into it. We got it like fully, like completely 100% vacant. And then yeah, so we were able to execute beautiful
Ooh,
renovations. Honestly,
nice.
we put a little bit too much maybe money into it, but I think I'm really happy with the product. So that's kind of the where development leads. So I kind of want to create products like this multifamily residential realistically, we built it from the ground up, like the
Yep.
plywood, framing, everything brand new, basically, right? So it feels like a new development. So that kind of is another maybe goal for
Nice.
2024. So that's another thing. We're in the process of purchasing right now. An interesting property with development potential. So that's pretty much my biggest thing in 2024 for now. And then on the personal side, I also want to continue kind of active income. I've done a couple things. I did general contracting. I did the wholesaling, bird dogging kind of thing. I think right now, for me, I want to kind of start some sort of a company that will provide some sort of value to either other investors or other entrepreneurs. So pretty much that's
Yep.
a capital assisting company. We're pretty much helping business owners kind of get assistance and personal assistance with them to do
Oh,
company calls, scheduling, etc. Anything for a company that they would need some sort of assisting in, we're helping in that sense. And also the real estate investment side. For me personally, I have a full-time VA in my real estate company, and I think a lot of investors, like, they shouldn't be doing a lot of things that they're doing. They should focus on
yep.
acquisitions, getting under market value properties, finding the opportunities, because I think in my opinion, in real estate, that's way more value than being able to execute on the deal. Obviously execution is
Yep.
very important, but finding the deal is equally or even more important in my opinion. So definitely people should focus more on that and not really worry about, oh, is the rent come in? Did I send the N4? Did I talk to this person? They have to answer the call, like emails, invoices. Oh my God, bookkeeping. Bookkeeping is the biggest thing that investors are doing. I used to do
Yep.
all my bookkeeping.
Yeah.
If I show you my books, they're so organized because I spend so much time on it. But now I can't
Yeah.
spend that time. I really realistically I don't want to spend that time anymore. So having a VA,
Yeah.
oh my goodness, my life has changed, to be honest, right? So I had a lot of experience training VAs. So that's why I think that I'm kind of on a good like it will provide a lot of value to other investors and other kind of business
Yep.
owners. So yeah, so that's kind of one thing that I'm going to be doing in 2024. Clienta, my partner,
Nice.
she's a real estate agent. She's doing that full time
Oh,
right now.
she is nice.
She graduated as an engineer, mechanical engineer, and now she's not even doing the engineering. She's full time in real estate. So, yeah, she's doing that. She's getting more into commercial, developments and houses, leases, stuff like that. So yeah, and definitely focus a lot on the investment side, and she's learned a lot from this entire process as well, negotiating deals, off
Yeah.
market properties, communicating with realtors, sellers, etc. So she's definitely learned a lot in that sense too, and I'm really lucky to have basically another version of myself in terms of like negotiating and putting deals together, stuff like that. But she definitely has a complete separate set of skill set to the table in
Yeah.
terms
Yeah.
of execution and coordination and planning and stuff like that. So that's where I lack, and that's where she's really good at. So that I feel like I'm lucky in that sense.
Yeah. I mean, I think maybe I'll go to my phone, change your contact to like Jude Alex Homosi or something, and then the clienta will be like clienta Leila Homosi.
Yeah,
But that's fantastic, man. That's great.
yeah.
Like you, you've definitely dropped a lot of bombs for investors who are listening, because like I agree with you with the VAs. As you know, like I also use VAs and I've been using them for years, right? So like I swear by the leverage you get when you're able to offset a lot of these tasks to offshore assistants or virtual assistants or personal assistants. So I'm with you on that 100%. Okay. So that brought us to the end of the questions that we had. But there's usually one question that I ask everyone who comes on the show, which is, what is your greatest L in real estate? And what have you learned from it?
Yeah, that's a great question. I think my biggest L definitely has been very recently. I'm still kind of maybe in the process of going through this L. Like there's always L's you make along the way. There's always mistakes. You always trust the wrong people. It's a part of the process. You have to learn by going through it. You learn by going through the
Yeah.
process, right? So I think for me, I may have learned a bigger lesson than I was really hoping for, because I've lost a lot of money from this mistake for sure. Well into the six figures, close to quarter million, maybe, in terms of like
Whoa.
just in total.
Are you
In
at
terms,
liberty to are you at liberty to share, or
yeah, I mean,
is
it's
it
not
private?
too like it's not like I don't want to go too much into detail, but basically trusting the wrong people, contractors, trusting big names, big company names, stuff like that.
Yeah. Yeah.
Definitely,
Yeah.
shed more light on the situation, but for sure trusting wrong people and doing that multiple times, maybe not learning from my mistake until that, big thing kind of hit me. But yeah, so definitely one of the big things that I learned from that was trusting the wrong people. But ultimately, I
Oh,
think
wow.
one big thing that kind of brought me out to the situation was just making sure that I had good deals. Seriously, my deals like
Yeah.
last year or this year, 2023, put me in a spot where I can lose that money and I'm still gonna make it 10 times over again, right?
Yeah.
Me finding good deals. I sure I lost that amount of money, but I'm telling you, 2024 is gonna be crazy, right? Because I'm putting myself in that situation where I find good deals and I'm very selective on those properties, right? Like there's a lot of deals that you have to be looking at deals to be able to say no to ones that come up, right? There's been a lot of ones that may have made
Yeah. Yeah.
sense. They may have made sense for normal people, but for me, since I'm strict with my numbers, I treat this like a business, and I want to for sure have that exponential
Yeah.
growth. I need to make sure that I'm getting good deals. So it all comes down to getting good deals at the end of the day.
Yeah.
There is that room for cushion for error. Obviously, this may be a bigger error than most, but even though that went south, I was still had that cushion, and I was still able to get out of it 100% not really affected that much and ready to explode next year. So yeah, definitely a big L, but I think learning I learned a lot from it, and like in hindsight, I'm gonna look back and I'm gonna think that I'm glad I lost that money. I'm glad I went through that so young. By the way, people don't realize I'm 22 years old, right?
Yeah.
So it's crazy to think about, especially since we have no JV partners and anything like that. I'm grateful that we don't have any partners because
Yeah.
I'm glad I lost my own money. I'm glad I made that mistake on my own deals rather than risking someone else's money. And that's why I want to continue this way, at least until I have execution down to a T. Once I do that, then maybe I'll
Yeah.
start raising money, funding deals together. But I need to make sure that I have a good cushion, a good foundation, making sure that the deals that I get are able to get me to that next level.
Boom, man. Boom. Okay. So I'm sure now everyone is like, how do I connect with this guy? How do I connect with this guy? I need to find out who he is, find out where he is, find out how to reach out to him. So if anyone wanted to do that, like how would they do that?
So I think the main point of contact maybe is Instagram. My Instagram is Fergo Estates. That's Fergo Fergo Estates, and yeah, they can reach out to me if they have any questions or anything like that. We're getting a little bit more active on social media, trying to get out there a little bit more. I treat it more like a resume more than anything. Just to like sellers are gonna see my name, type it on Google. I need at least some sort of a portfolio or a resume to put. So I'm posting certain things that will make sellers want to sell to me. So or at least
Yeah. Yeah.
understand who I am in that sense. So yeah, Fergo Estates Instagram, follow me, all that stuff.
Okay. Perfect, man. Thank you very, very much for coming on today, for sharing your experience, for inspiring the youngins. Like, I can't say thank you enough, man. So, that brings us to the end of the episode. Just want to say a big thank you to everyone for listening to the Jude Estate Wholesaling podcast. If you enjoyed the show, again, please rate and review us on Apple, Google, Spotify, and be sure to hit that subscribe button, if you want to know when Jude's episode drops and if you want to know when the next one drops. So until then, remember, a deal a day keeps scarcity at bay.